Hi Ron, Stuart here. We finally got to Thursday, the 3rd of April, and what a night last night was. Trump did what he said he would do, what he predicted he would do during the election campaign. Very clear, wasn't it? It's all about tariffs, deregulation, and taxes. And he's, since really he's got in the White House in the last 10 weeks, he's really just drilled down on the first T. Tariffs is the focus of his ire, and markets have really responded as you might expect them responded. Stocks are lower, gold hit a new all-time high yesterday. Treasuries were bid, yields have come down. The 10-year is at 4 just above 4%. We were at 4.35 at one point, immediately post election. So the chart on the screen there is the DAX this morning. Big down day yesterday into close under the key 22,000 level on the DAX. Obviously, we've had our all-time high here at the beginning of like with many. It was later than US stocks, but it was 18th of March and the 18th of 6th of March here, the all-time high for the DAX, as we went to 26,700 zone. But we've been down ever since, and big down candle yesterday on the back of the tariffs. 20% extra for the EU, 25% steel tariffs coming into place. Ms. von der Leyen, as she said yesterday, they had strong plans to retaliate. They're getting kicked into action this morning. So yeah, it was really across the board, wasn't it? It was countries like Cambodia and Vietnam that Trump has argued, and his Lutnick and Bessent have argued, his Commerce and Treasury secretaries, fronts for Chinese exports. So they've been hit really hard. If there was a picture, presumably, I would guess, hopefully everyone's seen it, but let's share it here. Well, I've got you here now as well upon the Discord group from last night. This is the picture we were all looking at. This is the board that he held up, and we zoom it up a bit. You can see the numbers there. There. So China obviously at the top of their IRA. 10% across the board, and then whatever the reciprocal deal is, so that the EU is looking at 39%, 20%, 20%. China around about 54%, 67%. The other way around. Colombia here, 10%. Cambodia, 97%. I reckon so 49% on Colombia. So some very high hitting numbers. India 26%. So it's obviously created a disruption. Many predicted would. Stocks are low. Interestingly, the announcement at 4 o'clock New York time was just obviously after the US market had actually closed. The cash market had closed. Whether that was deliberate or not, I don't know. But you can read into that what you will. But obviously, the futures markets were still open, so the reaction was equally as bad, if not worse, in the United States. The Nasdaq 100 is down. Futures this morning are down 3.8% here. We gapped on open as well here overnight, and yesterday big down candle. Obviously not as bad as we had on the 28th, but it was still a very negative candle into close, and the trend remained set. S&P 500. Bit like the Nasdaq here, you can see we're testing into the lows here from September last year. It was October yesterday on the initial reaction here, and we've gone lower again into this level. So next step down is 18,300, as we said before, which takes us back to the beginning of September, and then this little cluster here of days during the summer, which is on low volumes, remember, but it still happened. We went under 18,000 for the Nasdaq 100. The other caveat I would put on this, obviously the floor isn't in yet, I would argue, one day's move, but markets tend to overreact to any sort of news. This is massive, though. It's not like a normal economic news release. This is huge, and it's affecting all global markets, every single financial market and every single country, because everyone deals with the United States, are in focus. And obviously the dollar's come under a big pressure this morning. I'll come on to Forex in a minute, but 18,000 is the summer low from last year for the Nasdaq 100. So watch that to the downside, my friends. Let me go. Actually, let me make me a little bit smaller again so we can see. There we are. That's a bit better, isn't it? So you can see the chart a bit better. So there we are. Yeah, this is the daily chart, and obviously, if we look at the weekly chart, it's obviously knocked that on its head. And added to the big move down we've had here from the middle of February for the Nasdaq from the all-time high here over 22,000, 18,400 at the moment. So a continuing unwind of the big old rally we'd had during 23 and 24. So there we are. You see that low here, this 18,000 level from the summer of 2024 is the next big line in the sand after we get through 18,500 3-day run into that. So we might find some support at that. Still 300 points away from where we are at the moment. This is obviously the futures market. Can say the cash market is looking to open quite low weekly as well. Daily is down. So today we are looking at the why isn't this working? Oh, let's bless the calendar. Let me restart it. Today we're looking at weekly claims in 5 minutes time. 224,000 was expected. Obviously, the current crop of data this week, normally focusing on non-farm payrolls tomorrow, still very important. But the ADP number yesterday was much better than expected, but was sort of shrugged off ahead of what Trump may be saying and this blanket tariff against against the world. Basically, it's the US against the world. You wouldn't frame it like that, but that's where we are. Very, very disruptive for all concerned. Interestingly, though, there was no comment about Mexico and Mexico and Canada yesterday. So we had a rally, particularly in the CAD. We had the yen rallying really strongly. Sterling was up, euro was up. I'll say we'll look at those in a minute. This morning, just normal data flow wise, we've had the services PMIs. Remember, services is much more significant than the manufacturing, although it's this idea of bringing manufacturing back to the US that the current administration are focusing on. So we had relatively better than expected services numbers. So from a weaker manufacturing sector yesterday or early in the week from the purchasing managers in Institute, it's actually turned quite positive. The only fly in the ointment was the UK, which missed expectation, although it's still positive and it's still doing better than their counterparts over in Europe. So the European PMI came in at just shy of 51 for the composite, and it came in at 51 for the services part of it this morning. UK 52.5 and 51.5, although not as good as the market was expecting. But sterling's rallied really on the back of the collapse in stock markets, because remember, UK 70 or 80% of the earnings made by UK companies are derived in dollars. So the weaker dollar has weakened the UK stock market as well. Challenger job cuts this morning, bigger than expected, 275,000. So again, that's adding to this potential chatter about the weaker jobs market. Big move. And see what the claims are like in 5 minutes time. I said 224,000 last week, 225 this week. It's still a very healthy jobs market, I would argue, but there are cracks starting to show. And really watch the unemployment numbers tomorrow. If we just skip forward to tomorrow, I'll come back to the US services PMIs in a minute. I just skip forward to the non-farm payroll this time tomorrow. Remember the U6, this one I keep talking about. It's a much wider measure of unemployment in the US. So 8% it ticked up to last time. So watch that. I'll be watching that in particular. 4.1%. The headline number, and 140,000 is the I think 140,000 is the average on the Reuters poll. I think it's 137,000 on the Bloomberg poll. But see if that changes less than 150,000 from last month. But again, look at the revisions on that, because really it's been the it's been the strong jobs market that's been holding things up. But obviously, all eyes now on inflation and what the Fed may do on the back of that. We'll have a look at that once the data is out for the jobs today. The claims. So if we just quickly nip back to the markets, the stock market. This is our stock market move. That was the Nasdaq. We had a look at the S&P into a key 5,500 level and under it today. So this is yesterday's reaction to Trump. We were down again overnight and this morning, and again we're off 3.25%. Last time I looked, the US market was down. The S&P down. Remember, it's the world's most important stock market. 500 a big US company. So again, we're into the lows here. It takes us back to September 2024, and again, just simply on an end of day basis, that hiccup again we had at the beginning of September, which took us to 5,385, so under 5,400 to the downside. So we're at 5,500 at the moment, 5,400 next support area, and again the early part of August lows took us to under 5,200, so 5,300, 5,200 next downside levels of support coming in for the S&P 500. But again, I will just repeat, markets tend to overreact both negatively and positively to news. This is a bit more than just news though, and so the trend remains set, and we've been down from the all-time highs at the middle of February at over 6,100 on the S&P to under 5,500 now. So we are in contraction zone, correction zone with a big 10% sell-off we've seen, and it's still not really found a floor. You can see the levels as we move down there, 3,350 pivot areas here, resistance here as we were going up. A bit of support zone as we sold off a tad, now broke through it and new highs, and off we went. 5,500, 5,400 and 5,200 in round number terms. The live markets are live, obviously, in the UK. In Europe, we had a look at the DAX earlier. The FTSE is also under 8,500, having ran to 8,700 and 8,900 here at the beginning of March. So just a month away, and we're back down to under the 8,500 level this morning. Another key support pivot area, and then you can see the next area takes us back down to this 8,300 level, which was a resistance here in December, and it was broken significantly at the beginning of the year before we rallied up quite strongly for the FTSE. So FTSE, next big line in the sand, 8,325, 350 sort of zone through here on the UK market. Let's have a look at the major crosses, major moves for the dollar, very much under pressure. The biggest of them all, the biggest volume-wise it's traded is the euro, and euro spiked hugely yesterday, and then this morning it's just broken out, and we're over 109, over 110, and we've even been as high as 111.50. We went through 111 as well this morning. So massive move against the dollar, and for the euro, I say on the line, putting together a retaliatory package. It's not good for anybody, is it? Obviously, there's a big. I think Rubio's coming to Europe. Is it tomorrow? It might even be today for a big NATO summit. I think it's tomorrow, isn't it? Friday. So how he's going to be received is obviously somewhat questionable. But things are potentially. It's much more than just a negotiating stance from the president. But we'll see. So let's have a look at how that data has come out. Where are we? Thursday, the trade balance claims 219, so they've actually improved, if anything. So 219,000, so better than last time. Last week was upgraded 1,000 to 225. This is still a very strong jobs market. People are not claiming unemployment for the first time. So again, if we look at this, the chart, the 220, we're back to this sort of look very is that the current, yeah, 219. So it's under expectation. So you know, this under 220,000 is a very, very strong jobs market. Obviously not quite as strong as it was earlier post immediate COVID stimulus, but we're still you know, holding its own really. And these are obviously these are weekly numbers and not taken as significantly as the Bureau of Labour Statistics survey tomorrow, the non-farm payroll data. But you know, it's been fairly steady. So the strength in the jobs market is holding out. We had some outlier weeks. A lot of that was weather related, but it's still a relatively strong jobs market. So again, for tomorrow, look at the participation rate as well. Oh, my accent sounds really strong today. Have a look at the this participation rate tomorrow as well. Numbers. Where are we? Here we are. His participation rate here, 62.4%. See what that's looking like, and the working average work week as well. It started to tick up as well. So that's a relatively positive number. Obviously, payrolls, government payrolls. They're looking to, they're obviously chopping those. So have a look at how that's affected. And obviously the what Besant was interviewed yesterday late last night on Bloomberg, late my time afternoon in Washington, about sort of going on about, you know, manufacturing payrolls have ticked up. We have got 10,000 which was collected in non-farm payroll last time. In the ADP yesterday, there was again, it's because of all the focus on tariffs, it was sort of the data from ADP yesterday. Private payrolls people was lost. Where have I got it here? Durable goods. It was after. Here we are. I didn't break it down, but the private payrolls number in that, sorry, the manufacturing payrolls in that was zero. So some sort of conflict between the two ways of collecting that. So yeah, see what is in the NFP tomorrow. So obviously the weekly numbers is better than expected. It might have helped tick the dollar a bit, but the trend remains very much. Just, sorry, go back to the trend remains very much against the dollar on the back of the tariffs move yesterday. It's still an hour before the US cash market opens, but you know, the markets are still moving, as I say, and euro now 109.20. So where do we go from here? And hear you all screaming. Well, this is a big strong candle today, so maybe some profit taking into the end of the week. Tomorrow, obviously, non-farm payroll will decide that, and what actually the Europeans are going to put in place. As I say, they've said they will respond to the steel tariffs by the 9th of April. But you know, von der Leyen didn't pull her punches yesterday before the data was announced. So the issue around VAT, which is what Trump has made a big deal out. It's just, you know, it's applicable for everybody. So it's you know, somebody was talking about this causing macro paralysis. I was watching an interview on the CNBC this morning. I can't remember the guy. I think it was was it Barclays? I can't remember. It's one of the big banks. But talking about macro paralysis, this could potentially cause. So obviously the impact that on the Fed, if you're a Fed governor now, or Mr. Powell himself scratching his head there, the poor guys, they you know, the impact on rate outlook, that's with such a draconian tariff announcement. Obviously the thing with Trump's policies, it's how long they're going to last for. You know, are these, you know, you know, are they going to last for 2 months, 2 weeks, 2 years, or forever, or whatever it may be? Who knows? With the Trump approach to negotiations and doing business. But as you can see here, as far as the futures market concerned, this is the CMC expectations for interest rates in the United States. Next meeting is the 7th of May. And yesterday we had like a 90% chance of nothing changing. Today it's an 80% chance, so we've got a 10% swing. quite very well. That's a hugely significant swing to actually a rate cuts actually potentially 20% chance of something happening as early as May. So obviously some of the banks are now recalibrating rate cuts. Some are talking 3, some are talking 4 for 2025. So for 25 basis points cut, so a whole big 2% cut on US rates. So taking it from 4, where we are now, 450 down to 250 by the end of the year. But certainly the chances of a move in May has increased significantly. June was the potential move, and we now have a 60% chance of a 25 cut by June. That hasn't moved that much from yesterday, or even a week ago. So June is very much sort of not nailed on, but quite likely that we'll go. But we might even be lower. So it's now a 15% chance of lower rate, whole 1% lower. Whole 50 basis points lower by June. And again, that's more than doubled from yesterday. If you can you see that? It's no, you can't, because that thing's in the way. Let's just get rid of. Let me pull that down a bit so you can see what I'm talking about. There we are. There. Let me see if you can see that. I'll pull that down there. This is what I'm talking about here. So this is where we are now, 425 to 450, and you can see this is doubled a chance of a 50 basis points cut by the June meeting, from less than 7% yesterday to over 14% today. So this is the June meeting, probability that we will have cuts, and then July is sort of nailed on. There's only a 10% chance that we won't have moved rates by July, and there's a 40-odd% chance we're down by a whole 50 basis points, and 3 cuts. So May, June, July, there's a 9% chance of that happening. And again, you see that's doubled, more than doubled from yesterday. It's quadrupled from a week ago. These are just where the futures markets are, where the contracts are with regard to expectations of rate cuts in the US on the back of a higher expectation of inflation becoming to 3 to 4%, more than double their 2% target, and a contraction in growth from this policy. Obviously, the administration will say they'll say the exact opposite of that. They're saying this is what we said we were going to do. Trade is biased against the United States. We've been ripped off for years. Blah 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 blah. And they'll start to then perhaps focus on tax cuts. But again, the tax cuts very potentially unpopular with average man in the street, even Trump voters, if it's going to benefit the rich against smaller companies and individual families, and how far what they do with regarding deregulation. So that's the other 2 prongs, which they haven't said much about. Focusing very much on tariffs, and that's going to be the case. Obviously, in the next at least 5 or so trading days, as this calms down, or doesn't calm down, or we continue to decline as we move into the 9th of April, when they become applicable, the extended tariffs. The main 10% tariff on everybody kicks off at 5 o'clock GMT Saturday morning, so they're immediate. And then the 9th of April, when those double targets, so as I say, Vietnam 49%, China 54%, Europe 20 plus 20, 39%, Japan 24%, India 26%. Some of the world's biggest trading countries and companies getting hit very severely with if they want to do business with the good old United States of America. So let's have a look where this takes the euro here. So the weekly chart had already turned obviously significantly higher from the beginning of the year. And so 112 is the next line in the sand here over the next couple of weeks to the upside for euro dollar, if the euro dollar holds this 110 level. This is 109 here. I've actually got 110 in here. 110's round about here. So a holding of 110 this week brings in another 200 points to the upside. And similarly with all the other major crosses. Let's just do them all here while we're here. So this is the weekly for sterling. Again, a big rally for 2025 for cable. The hugely significant 125s all the way down here now. We breached that a couple of months ago, and now we've breached this week at 130. So we need to hold 130 over the next couple of weeks. If we're then going to take out 132, which we've already tested today, and then this high that we got to at 134 back in September is the next upside target. So a hold of 130 takes us through 132 and then 134 to the upside, and a hold and break of 134 obviously brings in chatter of 135 and the combination of zeros and fives, perhaps a stalling area there, but certainly 134 is the technical immediate level, or just shy of that 133.85. But 15 points. What's 15 points between friends when you've been long all this time, I would guess, on an end of day week basis. Yen, massive move yesterday. Dollar yen, huge down day yesterday. This is the weekly chart as well. Let me just go back to the daily first. So big down day, having looked like the dollar was coming back again, and the yen was weakening, but we had this rounded top which didn't look very positive. Small candles to the upside in anticipation of the tariffs announcement on the 2nd of April. Again, sideways, not much money getting put to the blood. And now we're into the other thing that's happened. Obviously, we had at the end of the Japanese financial year as well on the 31st. So we reacted quite aggressively. Today we've reacted quite aggressively down and under 146.50. But even at this level, this is still relatively high historical terms. 146 for the dollar yen in historical terms. I can't really show you it very well. I don't think. Yeah, I can't really show you this. Very well. This is monthly chart, but it's only going back to 2023. But take my word for it, we're still very high in historical terms for dollar yen. So here on the weekly chart, big week down, obviously engulfing the 3 previous weeks, as we've given up the attempt at 150 at the beginning of end of March, and you can see here the down candles much bigger than the green up candles. So that's where we sit at the moment. 146 is where we sit at the moment. As you can see, the next level down would be here at 144. I'm just talking in round numbers here, guys. And then 142.50, which takes us to the beginning of this week here in September. And this cluster here takes us to 141, and then we'll bring in inevitably 140. So 140 was our foot and our floor for 2024. And that's the line perhaps the Bank of Japan might be moving to, or wanting to get the yen down to, or up to, I should say, dollar yen down to 140 over the next few weeks. Certainly, next first pause is 144, following a break of 146 if this happens this week. So again, trend down. Alternatively, a break back over 150 needs to break and hold to the upside, and then we got the immediate resistance of the 20-day moving average and the 50-day moving average. The 20 sits at 151 and the 50 sits at 152. So upside targets as well for dollar yen, but the trend remains to the downside on that one. Swissy was a big move as well. Remember, Swissy and the Japanese yen are safe haven currencies. They get demand, particularly if the dollar's not seeing it. And obviously, this uncertainty has added to the weakness of the dollar. It's a gold rallied, so Swiss franc treasuries have rallied, yen's rallied, and again, this is the weekly chart for the Swissy. We've got the daily, huge down day again today, breaching this range we'd been in. It was looking relatively positive, wasn't it? I was looking to go long here. I think we were long this one. We got stopped out, or we closed it out early yesterday. It was a scalping overnight trade. I think we were out for a few pips on that, but big old move down again. We've seen on all the forex crosses against the dollar, 85.90. So we're under .86. And again, if we scroll this in, we're back to these October levels, September, October levels. This is actually October the 9th level it's a bit inconsequential, isn't it? Actually, there we are. That's a big level there. So 85.70 for the Swissy, but the cluster really back here again through the end of August and September through here at 84.50 or 84.60, 84.50, and the actual low for 2020. Actually that intraday low took us to 83.80. So 84 is the big round number line in the sand for downward targets for the dollar Swiss. Obviously, a big move back would need to take us back over the 20-day moving average at 88.34, and we're currently under 86 at the moment. So the trend moves down. But as I say, these are huge candles, and today it's a daily candle. It's not complete, so we can't really make any decisions on that. There may be some obviously retrace because, as I say all the time, guys, markets overreact. So they get very overextended very, very quickly. And as you can see on the RSI, what a sort of parabolic decline on the RSI. It's not healthy, but these were not healthy announcements as far as the status quo is concerned. So we are readjusting markets and participants, investors, bankers, insurance, reinsurance people, all now looking at their charts and their spreadsheets and portfolios and seeing what they do, where is value, where can we get best bang for our buck. Canadian dollar also did very well yesterday. So this channel, we've talked about this for months, haven't we? It's really channel bound. The initial surprise on the announcement of tariffs back in February. Here we are, March, April, 2 months later, and dollar CAD having spiked to 147, 148 zone. We're down to 141 or under 141 this morning. So a big reversal, having lots of indecision. But again, there was no actual extra tariffs announced on Canada and Mexico yesterday. The USMCA agreement, free trade agreement that they'd signed, which Trump signed in his first term. It hadn't been mentioned at all, really, in when the rhetoric was flying around against the Canadians, becoming the 51st state, and they need the USA. They need the USA. No, nothing yesterday. So CAD picked up really significantly and added to its 2-day rally, and we're down, I say, under 141 this morning. 140 is obviously the big fat round number and line in the sand, and a big congestion area here that we were last in during November and December. So 140 is the next downside zone for dollar CAD. And have we done the Aussie? I can't remember if we've done the Aussie. No, we're going upwards, aren't we? And finally, the Aussie 63.63 this morning. So again, really less of a move from the Australian currency. Relative, still a relative move up, but a top is in at 64. We're at 63.63 at the moment, but still somewhat range bound. We haven't broken out that yet. We haven't got back to this February 20 top when stocks rallied. That's up there. So yeah, so Aussie obviously much more exposed to Asia, and it's the Asian economies, especially the smaller developing countries like Cambodia and Vietnam that have been hit very aggressively. India's also been hit very aggressively. Australia is exposed, obviously, not only to China, where something like, I've forgotten the actual numbers. It's something like 56% of all exports from Australia goes to China. I have to double check that number. Don't quote me on that. But they're a bit of a proxy for what China will do. Obviously, China will respond as well. Presumably, the government will move to start trying to stimulate the Chinese economy again. How aggressive in retaliating against the United States, again, time will tell. And things are changing literally by the minute, aren't they? So, some markets, as I say all the time, and I'm sure you all know, hate uncertainty. And so we react accordingly. So it's a weaker dollar, a weaker stock market. Gold has hit yet another all-time high this morning, but it's actually retraced quite aggressively, which is also quite an interesting move for gold today. So people, again, this is a question about liquidity, even against the dollar now, given these drastic moves. So some of these big gains we've all seen, and we were part of the big gains on this rally in gold during 2025, particularly the last leg, the March leg. So liquidity getting pulled out, and gold having hit a new all-time high at 31.67 this morning, has turned around. If you look at the turnaround today, it's quite vicious as we went. as we went higher. So it was a vicious leg up, but then we've reacted and moved down quite significantly as well through that 310 level. 3110 level where we retraced to the day before, and we bagged our $55 on that move, 500 odd pips. So yeah, we're well in the money. We've got no live trades at the moment. I will let this all settle down and see what happens tonight. There'll be certainly some situations triggering, but I'll need to look at that manually. There you can see on the hourly chart, we're oversold quite significantly for gold, so there may be some buyers around about, but where we are now actually 30.75, which is a resistance area, cluster area. Yesterday, earlier in the month here, before we went to our legged up, so we may see some buyers at where we are now, is 30.10 level. But anyway, gold reacted quite really. I don't know, but I'm thinking that's very much profit taken on this massive rally, and liquidating some of the positions to cover some of the short positions that have been called out, or long positions that have been called out, depends where you were ahead of this announcement from Trump. So stocks hit really aggressively. As we say, we don't offer individual stocks here at theproptrade.com, but certainly the wider stock market has been hit quite significantly. So let me just have a look at some of these others as well. Silver 32.10, so a similar move for silver yesterday as well, although it came off more aggressively. Remember, silver is not just a precious metal and somewhat of a safe, it's much more of an industrial metal than gold is as well. So it's very much suffering from this, especially cramped down on Asian markets. So silver's sold off even more aggressively than gold has, having hit its all-time new high here at 34.50 at the end of the quarter. 28th, wasn't it? 28th, 29th? Yeah, 28th. That was when silver pushed up to this 34.50 level. And crypto's been hit as well quite aggressively as everything's moved down. So 82,000 for Bitcoin today. That's today's chart. We were lifted yesterday into this, as we were talking yesterday, back over this trend line. Couldn't get over the 50. We were over the 20-day moving average, but we turned on its heels again. So as we've been saying for a while now, the bias is, the lift up is being pulled down every time. The lift up was being pulled down every time. So we, obviously today's candle isn't complete, but look at the red candles, the big bodied red candles, much bigger than the green up candles here now that we've rolled over. So the bias remains to the downside. Obviously back under this down trend line would move us lower and into the 78, 76 support zone is the next downside target. If we break the 82,000 level, which is where we sit right now, as we've done that for the last 5-6 days, haven't really wanted to go under 82,000 for 1, 2, 3, 4, 5, 6 days. Will that breach today or tomorrow? We shall see. But the resistance is obviously this top here, just over the 20-day average now at 85,500 for crypto. MACD here looking to cross to the downside. RSI can't get over 50 and negative, and that's trading at 40, so it's moving out of its sideways zone, moving quite negatively. So that's still under. Bitcoin remains under pressure. So there we go. Let me just let's have a look at oil as well. Obviously demand will be hit significantly. So the breach of $70, as we were talking about earlier in the week, looked pretty good. We rolled over here. Pretty good at the end of the quarter, at the end of the month, there on the 31st. Tuesday, we moved a tad high but couldn't hold it. Wednesday, we were higher into 72, couldn't hold that. Closed lower, settled lower yesterday, but still over 70. And the follow through from the tariffs today has took us down to 67.25 in that key support area at 67, which we saw during the end of the beginning of March as a support area. So if this weakness continues in global markets, obviously those intraday lows we had here at beginning of March at 65.50 could quite easily be tested quite quickly again. A break over 68 here, where the 20-day moving average, 69 in fact, needs to be taken out, and the $70 level, obviously if we're going to move to the higher level. So a break of 67 will take us to 65.50. Probably nothing's guaranteed, but that's what the chart is telling me. And you know, the scenario of higher inflation, lower growth isn't great for the oil market. But and if the Americans are, you know, focusing on energy, which is part of their, you know, their tariffs, deregulation, taxes mantra, energy, bringing shoring or bringing jobs back, manufacturing jobs back to the United States, even though it's a small sector of their economy, the hit from the services sector, you know, could more than compensate any growth in jobs. So the golden age of American manufacturing, which is what the mantra is from the Trump regime, Trump administration. I shouldn't use the regime, should I? We'll see. Crazy way to do business, but that's what he's focused on, and that's what he wants to accomplish. And we'll see what happens. Meanwhile, everybody else is getting hit. So let me just leave you with the most popular asset, or the two most popular assets. We got Euro 108.55 now, down from the high. It's got the hourly chart. It's pretty spectacular today. So we've been as high as 111.50, and we're now 110.85. Trend very much set today on the breach of 109 in particular. The small into close last night, and off we've gone. And the other one we just shown you, gold, the most popular asset of ours, on the hourly time frame. Congestion rally this morning, last night. And then we've rolled over and we're down today. See where this level holds now, my friends. This 30.80 zone. Are we going to find some support here at the moment? But it's sold off quite aggressively. I think some big players having to cash in to liquidate positions, given the perhaps drying up of liquidity. If I have a quick look at over on Yahoo, gives you the futures market. So General Motors down 2%. We have a look at Tesla in the pre-market. That's off 5.5%. It was up 5% yesterday on rumours that Musk was quitting his Doge position in the government. And that was never going to last very long. Was it the buddy, the bromance? But that's turned on its heels again, 5%. So it's a particularly volatile stock, Tesla. And one of the world's biggest companies, Apple, has been hit really severely, down 7% in pre-market. All of its key suppliers getting hit by the tariffs, 25% on all laptops and computer goods. Obviously, Taiwan's been hit as well, the big manufacturer of the AI chips as well. So the Blue Ribbons stock are also very much under the caution. The Tech 7 very much under pressure. Nvidia down 5% pre-market. So markets open in 30 minutes, and we'll see where we go for the rest of the day. But that we are, you know, the trends that we've talked about earlier have still remained very set. The gold. If we look at the daily chart, the gold chart is still bid. The 20-day moving average now is at 30.27. We'll see how this day ends, but certainly some profit taking, having just peaked a new all-time high. It's not unusual that maneuver. But you can see currently it's a big negative down day for the gold market on the back of the tariff announcements having been, in the overbought zone. But MACD line select across, so it's cooling. But we'll see again where that finishes the day. So I'll see you all tomorrow for non-farm payroll. Guys, if you've not got an account with us, why not? Come and join us. We're clear, we're transparent, we're open about everything we do. Our most popular account, as you can see here, is 25,000. If you've got a coupon code, if you've been watching this video, you put in SC 25, I'll give you a 25% discount. If you want more, and why not? We're still offering it. Eid 30 is still valid this week. It's the big Eid holiday for all our Muslim friends. And that will give you a 30% discount off these very competitive priced challenges. The $25,000 account, whether it's a 2-stage or the Express Challenge, it's all about whatever size account you have. It's got to follow the process. You've got to follow the rules. So you don't want to be losing too much. You want to target. You got as long as it takes to get to the target. There's no time limit. But if once you've gone through either the first phase Express Challenge or the 2-stage phase 1 and phase 2, you then get your funded account. And any profits at the end of that trading, your funded account, you can hang on to at least 80%, and up to 90% of the profits can be yours, real cash. Even though we're trading simulated accounts. But obviously with real data feeds, with real price action, as you can see here on the gold chart, there is money to be made. And if you follow me on the Discord group, close that. If you follow me on the Discord group under the trading strategies, most nights, normally every night, I will put up a trade. I haven't actually updated this from yesterday. I missed this. These were 2 trades from the night before, ahead of the tariffs. These were they were both losing. They didn't lose as much as I didn't let them go to the stop loss, but we took them out after this video yesterday. So around about 2 o'clock, we closed those 2 trades. So both losing trades for a few pips, but we are up over 1,000 points already for April. We've had some massive moves for the gold on the gold market and the index market. So check these out every night. It doesn't cost you anything. See it for yourself. Try and play with it yourself. But most importantly, instead of following anybody, have a strategy, have a system that works for you, that works with your time frame, that works with your lifestyle, and works with your account. So proptrade.com. We're here to help, guys. Come and join us, and we'd love to have you on board. Okay. See you soon. See you tomorrow for non-farm payroll. The aftermath of Trump's tariffs will continue to ripple through the markets. The responses from China, Europe, the UK. UK's only got 10% because there's not much of a trading balance between the 2 countries. So see how the UK respond as well. Obviously, the big issues remain with China and the EU. Okay, so take care, everyone. We'll see you tomorrow, and may the pips be with you as ever. All the best, everyone. Bye bye.